Sterlite Technologies has been a stock on a roll, maybe with reason. Got hammered in the carnage in the mid-cap space, but since then has bounced back very, very smartly. They've also done an acquisition. The important thing to note, or important thing to ask the management, is whether this is a part of a string of pearls strategy that they will adopt on a global level, or this in itself gives them enough meat into the European region where their exports are increasing by the hour. To talk about that and more, Anand Agarwal of Sterlite Tech joins me on the show. Good having you, Anand. Thanks so much for taking the time out. Can you talk a bit about this acquisition? Is this a large acquisition in itself, or is it a part of, as I was saying, a string of pearls strategy that you may adopt to enhance your role on the global platform?
Sure, Neeraj. Thanks for having me here. So essentially, this acquisition is part of our strategic roadmap. If we see our overall vertical integration approach, the core of the technology is what we make in glass, which is preform, which largely we do in India, which we're expanding to 50 million kilometers. So that's the glass and the fiber part. With the drawing of the glass, we do it mostly in India and partly in China as well. And the cabling, which is the downstream part, which needs to be closer to the customer, is where we are expanding points of presence at various locations globally. So now we have it in India, we have it in Brazil, and with this acquisition, now we have it in Europe as well. So it's essentially a milestone in our overall roadmap. The subsequent points of presence that we do globally at any points, we always see the perspective of doing a greenfield, making or buying. So all those perspectives will still apply. But for now, this is a great acquisition. It provides a good platform. Europe is already almost 25-27% of our sales. And Metallurgica fits in right in there with great customer access, with good manufacturing capabilities, and a great degree of capacity, all merged with a very, very good talent pool. Yeah. So we are very pleased with this one, and we'll see as we go along.
Yeah, I read that even Metallurgica is not even operating currently at probably optimum capacity or full capacity utilization. Let me put it that way. Europe has this gigabit society goal as well. Does this in meaningful way give you the ammo to up the game via Metallurgica over the course of the next couple of years in the European front, Anand?
Absolutely, absolutely. So we are already strongly present in Europe from our perspective, but if we see it in an overall European context, we are still small. We are strong in a couple of countries. We are strong in UK. We're strong in France. But with Metallurgica, now we have the required strength, both in market access, in capacity, to look at Southern Europe, to look at Central Europe, to look at Nordic countries. It gives us a great platform to go elsewhere, which we had been lacking due to logistical reasons, due to access to the markets. Now it provides us this great access.
Great. So, and I believe you're present, as you said, in Brazil, you're present in China. You also have some presence in India, Brazil, now the Italian firm, and then China. Would you actively be looking at more such acquisitions? The reason also I ask is that, if I'm not wrong, I was reading an analyst note which said that via internal accruals and access to low-cost debt, you'll be able to fund this very, very easily. Does this also give you, one, the confidence, two, the hunger to probably do a couple of more such things? Because you are, arguably, as you've said in the past, in a very high-growth space, not just in India, but on the global level.
Sure. So we'll look at it. Everything we'll look at it from a strategic perspective. If we need to do something from a capability perspective or market access, we always look at whether we can buy something or we can do it organically. So per se, we really don't have a M&A target list, but there is a clarity on a strategic roadmap. We will do 50 million fiber, we'll do 25 million cables, we'll do it in select geographies globally, and we'll always review if there are good companies available who create value in being together. We'll definitely look at that. But I don't have a list per se of geographies and name of companies to go and acquire them right now. So.
Okay, maybe one more reason why I asked you this question, Anand, was that while you are present across the value chain, be it preform or fiber or cabling, the world, as I learned from a couple of presentations that I heard recently, the world is facing a shortage of preform capacity. Now, would you look to enhance capacity, one, brownfield, or organically, and two, maybe inorganically via acquisitions like these? That was probably one more reason why I asked you this question.
Sure. So we are already doing it organically right now. We are going from 30 million to 50 million. 40 million will come by end of this year, so end of December 18, and by June 19, another 10 million will get added. So within a year or so, from a 30 million capacity sitting in June, July 18, next year around this time we'll have a capacity of 50 million kilometers. That this extra 20 million provides us good enough firepower to get more access, to get more market share globally. Beyond that, if we need to do, again, we'll review the decision. Does it make sense to buy or to make? And at any point, currently, considering the fact that the supply demand dynamics are so strong in favor of demand, anything that we even look at buying would be commercially not viable.
Okay, actually, if I can throw in one more question out there, from what I also read, the Verizons and the Vodafones are pre-booking capacities in a meaningful way, unless I'm very wrong. And somebody mentioned that the spot prices of fiber way higher than the long-term contracts. Do you envisage pricing moving up on the long-term contracts as well? And does all of this, coupled with the enhanced capacities that Sterlite Tech across the platform will have over the course of the next couple of years, only mean that both the volume and the pricing on fiber would dramatically improve for you as a company too over the course of the next 24 months?
On the demand side, yes, and we are already seeing that on the demand side. In the last 18 months or so, our order book on the product side used to be 700-800 crores, which has now closer to almost 4,000 crores or so, which is other than services and software. So we have seen a 4-5x increase in order book in the last 18 months for us. And we are booking orders we are largely booked for the current year. We are reasonably booked for calendar 19, and we have orders going into 20 and 21 as well. So on the demand side, clearly there is demand and there are multi-year engagements. What you talked about, the spot prices, we have consciously decided since many years not to play in the spot market at all. So while we hear of such prices, we have no direct experience of those high prices. We have to also see the dynamics of the overall industry. See, on the industry, our immediate customers, which are the telecom providers, they continue to be having a pressure in terms of revenue per gigabyte. And so we can be opportunistic of trying to take advantage of the demand supply situation, but we have decided that we will not be opportunistic. We would rather book our quantities for longer term than trying to increase prices in the shorter term. So for us, pricing has been reasonably stable, but the order book forecast and the order book longevity is increasing, and that's a decision that we have taken.
Okay, interesting. Maybe a couple of questions on the product side before I move on to the services and the software side. Anand, a statistic that somebody gave me was that China deployed, I believe, about 285 million kilometers last year. Now, India is probably a fraction of that all through the life cycle and definitely in the year gone by as well. Is the domestic business for you as a company, and that will only come if India as a nation really expands meaningfully or spends meaningfully on this capacity as well. Are we seeing any signs of that at all, or would you believe that the large portion of growth that will come in for your products business would come in from the global arena?
No, we are very, very bullish on India, and we are certainly seeing signs of it right now. So in India, with the incumbent telecom providers now actively looking at connecting all their towers with fiber for their 4G. The newer ones like Reliance Jio moving from 4G, focusing on fiber to the home in lots of cities, the BharatNet rollout moving to the next phase, the smart city moving. So in India currently, there is a great degree of focus, a great degree of intent converting into orders, and it's no longer the question of whether India needs fiber or will it deploy fiber. Now the constraint is moving to an extent supply and execution. The degree of execution that the country would need to do over the next 3-4 years is it has not done in the last 15 years combined. So the focus is now going to move towards delivery and execution, and we as a company are also focusing on seeing how we can solve the execution bit of the problem through our services business.
Am I to presume that the Indian pie of the business will necessarily, because the nation needs it, move up for you as a company quite dramatically? And would it only happen at the behest of a player like Jio doing this, or would the other players, or are the other players also actively looking to do the same thing, the connectivity to home that you mentioned about?
Clearly, it's I would almost say it's happening at the behest of the consumer. The consumers now want to consume 6 to 7 gigabytes of data every month. To deliver that to 1 billion consumers, you would need a completely revamped network. So Jio is taking a lead in delivering that in all the cities. For Airtel and Voda Idea, they are following it up also because they have a older network and they need to convert it into all IP. So they are focused towards making that conversion happening. BharatNet is moving forward with its connectivity to the rural part of the country. So I see a multifaceted approach, which is actually required for a country like India to deliver this 5 to 6 gigs per month to the billion people in the country.
Interesting. Some thoughts on the non-product side as well. I know you can't talk too many numbers, you would be in your silent period, so won't press for that. But the last time that we spoke to you, which was in December, in an extended conversation, you had mentioned that you're not only looking at designing the new networks, building them, monetizing them and managing them, but also integrating it with fiber, the services vertical and the software vertical. So how is the non-products side of the business shaping up now? 6-7 months ago, you were talking about this taking new shape and form and a much higher scale. How is that played out over the last 6 months, and has the scale and the capacity only expanded?
Sure. It's services is the domain which is so for us the glue between what we do on the product side and what we do on the software side. And the new networks which are coming, it's called the networks of the future, is actually that a very simple evolving network where there is a very high quantity of fiber and it's all governed by open source software and open source hardware. So our services business is focused on that. And the scalar growth that we spoke about 6-7 months ago is already reflected in this advanced purchase order that we have from the Indian Navy, which is worth almost 3,500 crores of business, which is to connect 43 naval bases with a state-of-the-art communication network. And it's a vertical network with fiber at the very base level and then enterprise solutions at the very apex levels. And it's an end-to-end communication network, which us having that capabilities of fiber, system integration and software, we are very, very uniquely positioned to deliver to such a requirement. And services is that glue which provides us that capability to deliver everything end to end.
Interesting. So I don't want specific numbers of what you will clock in every quarter, Anand, but can you give us some ideas of what the natures of these businesses would be? Like, for example, let me start off with smart cities. Last time that we spoke, you gave us an indication of what a Jaipur or a Gandhinagar or a Kakinada could be. There could be an initial layer, and then there are multiple layers of networks that you build in, and then the revenue capability for you as a company is in maintaining that project for next 5 to 7 years, but also monetizing the layers that you're putting in. And once you have the foot in the city, the number of revenue shoots can only expand. Can you give us some idea of the numbers that an average sized smart city project can draw in for a company like you?
Smart city is projects of multiple different sizes. The numbers that I spoke to you last time in India, the sizes are about, today for each phase, it's about 50 to 100 crores. Some cities are now moving towards 400,000-500,000 crores. What we see globally, a smart city project can be a project worth almost $300 million. So smart city today, since it has such a wide degree of definition and different people are interpreting it in a different manner, it could be a project from 50 crores to 2,000 crores. But nevertheless, for us, the focus essentially is in the revenue starts happening at three different levels. The initial part is when you roll out the network itself, when you are building the network. So that's a CapEx which the city spends, and we design the network, we roll it out, so that's one part of the CapEx. The second part of the CapEx is the second part of revenue stream essentially is towards the operation and maintenance of the network, which is typically 5 to 7% of the CapEx in an annual basis, and that becomes an annuity. And the third part, which is today completely unexplored, would be the monetization of the network in terms of revenue sharing. Today, we are largely, for the networks that we are building in our services business, are focused today in terms of timelines. It's all the first part of the revenue, which is just building the network. We are building that network for Indian Army in Kashmir. We are building some of the smart cities. We have bid for some networks to be built to connect the villages through BharatNet. So today it's building the network. As the build part of the revenue augments and it becomes a large number over the next 3-4 years, even 5 to 7% of that, the O&M part would become an annuity for the next 5 to 10 years. And the monetization part, which is not there in all the opportunities, but in a few of them, is an interesting aspect, which it almost becomes a kicker for us to look at it. But I would almost say it's a cherry on the top, and we are not even considering it. It's a interesting thing to think about and structure yourself to be ready for that whenever that kicks in. But the clear focus for us is today is in just the infrastructure build part of it.
Okay, and please correct me if I'm wrong, Anand, but your infrastructure, all the build part is what your current order book is, which is that about products, non-products combined about 5,200 crores, which we have, and added to that another 3,500 crores of the Navy order, which also I presume is a build the infrastructure part.
3,500 crores contains about 2,600 crores, which is build, and 900 crores, which is operate and maintain for 10 years.
Okay. And the Navy 3,500 crores is entirely build as of now.
That's what I was saying. For Navy, 2,600 out of 3,500 is build, and 900 is yeah.
Okay. And
but you're right in terms of the current order book that we have. 5,200 crores is largely either product supply or the build part only.
Okay, and the size of the Navy order, which is arguably larger than what your current revenue book would be, shows the scale of orders that corporations or municipalities or governments or companies would be willing to give you. Maybe not the magnitude. I'm not questioning the magnitude, or I'm not asking about the magnitude or the exact size, but would orders of such large magnitude, 3,500 crores, could be 2,500 crores, could be 2,000 crores, whatever the number is, are many more such orders possible for a company which is arguably the leader in this optic fiber and this whole data digital space in India?
It will depend upon what the various entities are looking at building. Networks can be built in a macro manner. It can be built in layers and stages as well. Navy is a macro network built out, 43 sites all to be built out in a period of the next 12 to 18 months. And similarly, and it is like a pan-India sort of a rollout, which is going to happen. The state opportunities will be lesser in size, would range from say 500 to 1,500 crores. The city opportunities will be slightly even lesser in size could be between 50 to 500 crores. So it will depend both on the scale of the geography as well as the scale of the complexity in the network. And we are looking at in a very focused manner the ones where we can play a role in designing, where we can create value in terms of rollout. So different opportunities, I would say, would range from 100 crores to say 2500 crores. That will be the scale, based essentially both, as I said, geographic as well as complexity.
Okay, I'm totally short of time, Anand, so I have one last question, or maybe two questions rolled into one as the final piece of this conversation. One, would you continue aggressively on the non-product side? The reason I ask this is because, unless I'm very wrong, the margins on the non-product side would be lower than the margins on the product side. So one small view there. And two, this whole opportunity from 4G to 5G, which a lot of people are touting to be way bigger than what the opportunity for 3G to 4G was, I'm sure of it. Is it still, in India at least, a few quarters away?
Sure. The 4G to 5G opportunity, as you rightly said, is much larger, where the points of presence, all the towers, micro towers, small cells are moving closer and closer to the consumer, and everything is connected by fiber. So it's a large opportunity, and you're right. Even globally, this opportunity is a few quarters away. Globally, also right now, only POCs and trials are happening right now. So in a macro manner, globally, 5G will hit only in 2020, where it starts becoming significantly meaningful in the overall CapEx cycle. In terms of services and software, clearly product is an area where we are fully focusing on what we need to do and strategizing it. But our relevance, our key proximity to the customer starts coming in as we start becoming closer in terms of them towards designing their networks, towards building their networks. So we will be working for both products as well as services and software in a holistic manner, in being able to design and create that opportunity for the customers. And we will grow both businesses simultaneously, while not depending on one at the cost of the other. So that's a focus for us as we move forward. Fully capitalize on the customer engagements that we have, fully capitalize on the strength that we have on products, and go full log on there. At the same time, increase your relevance, increase the design capability, increase the degree of presence with the customer through services and software, which is becoming more and more and more relevant as the networks are completely evolving, completely becoming software defined, completely becoming virtualized.
Great. Anand Agarwal, many thanks for joining in today and giving us your thoughts. Really appreciate. Look forward to talking to you post your quarterly numbers.